Hey guys, and welcome to the Working Money Channel. Is this a sign for XRP hodlers? Guess what the price of Tesla stock is at, guys? $589.89. Is it a sign? I mean, I don't know. This from DJ Peter Vass and Ian Northing here retweeting out Elon Musk's tweet. To be clear, I strongly believe in crypto, but it can't drive a massive increase in fossil fuel, especially coal. So continuing to push this crypto enviro narrative forward. I did a video yesterday on that. I'll link it up here if you guys didn't catch it. Basically, Bitcoin out and green cryptocurrencies in. So real quickly, I'm just going to bring up the Tesla stock here. Tesla stock has not fared so well over the last little while. This is Tesla on the 4-hour. Right now, during the pre-market, it is trading at about $573 per share, so under $589. Tesla did reach a high of about $900. And Bitcoin is rebounding, guys. This is Bitcoin on the 4-hour. Going to throw a Fibonacci on here, and you can see Bitcoin is coming up above the 0.236 right in here. So this is going to be a moment of truth. How high can Bitcoin go? Are we going to be able to break all-time highs for Bitcoin? At this moment in time, it doesn't look likely, but the crypto market has surprised us in the past. Altcoins still really haven't had that massive rally. When Bitcoin retraces after, usually what happens is there's a major knockback, Bitcoin retraces, alts tend to rally, and then that's the end of the cycle. We haven't seen that at this moment. And when I take a look at Bitcoin zoomed out on the daily, you guys can see over here the bull run of 2017, and I've done this exercise before, but I just kind of wanted to grab a fractal pattern here and bring it over and compare it to what we are seeing today. So again, we are seeing something similar over here, although it has been elongated out a little bit, where we have seen a top out, corrects, then tries to come back up, cannot make a new top, and then what happens is it actually dips even further down. Now, I'm not saying this is going to happen, but guys, check this out right over here. If we do see something similar, this fractal pattern does line up with the top, backtesting this high for Bitcoin back in January. So it is a possibility, and sure enough, once we can break out of there, if it does happen, that would bring us down to about 40,000 per BTC, give or take. Then we could see Bitcoin potentially make new highs. And, this could happen over several months. I'm not willing to guess how long we're going to see this move sideways, but just to warn you guys, prepare just in case. Finally, I'm going to bring up XRP here on the hourly, and you guys can see moving out of the 0.382, trying to make our way back up to the 0.5. When I zoom in here, you guys can see a lot of positive momentum for XRP. Right now, XRP is trading at about $1.40. So we are back into the 140s, and, a green initiative, Elon Musk, XRP, a very green cryptocurrency. How is this going to all tie together? Well, Corey Johnson is also tweeting at Elon Musk here, and if Elon truly cared, he'd look at XRP the standard. Corey Johnson, for those of you guys who don't know, used to work at Ripple as one of their publicity coordinator type people. I know that wasn't his actual title, but he was there a few years ago to help the narrative along. And even though he doesn't work at Ripple anymore, it still looks like he's tweeting out to help the cause. Clearly, there was no ill will when he left. And so he posted this: XRP consumes less energy than ETH and BTC. Screen grab here just demonstrating that. Of course, we all know that XRP is more environmentally friendly. And this posted on Twitter by STEPHENCHIP. Julia, what have you done now? Interviewing Anthony Pompliano. I know some of you guys have likely already seen this clip. I'm just going to play it for you real quick.
I was looking for it. Cambridge University did a big study, and I've read it. I guess some of the criticism that will instantly come is 65%, I believe, around of Bitcoin is mined in China. And whether they're using renewable or not, it's tough to verify. Do you accept that that is a challenge here in terms of verification of the data? But also, even if we're just talking about digital assets in general, there are cleaner energy versions, Ether, for example, XRP, not mined. Is that a fact that we can stick to at this moment?
Yeah, I think one of the big things here, right, is to remember that money is energy. It's stored energy. And so you need some conversion of energy to have money be valuable.
But you didn't answer my question. There is cleaner digital assets than Bitcoin. We're clear on that. And I think that's important for people to understand whether you love Bitcoin or not, or you like other digital assets or not.
You didn't answer my question, though, Pomp. Stop mansplaining to me. Anyway, thought that was funny. Wanted to thank STEPHENCHIP here on Twitter, and I'm sure a lot of you guys have already seen this. This is the way crypto is going, guys. A greener initiative is fueling the fire. I think this is why we have seen XRP really rebound quite significantly, even compared to Bitcoin at this moment in time. Well, it just gained another 2 cents while I was talking about that last clip. So there you go. More information here, guys, with regards to the green innovation narrative, and this has to do with VeChain. So VeChain X Green Innovator Roadshow. TESFEC, or TESFEC, is hosting a green tech conference on carbon neutrality, AI, 5G, and IoT technologies featuring 5 companies, including VeChain. So VeChain on this list, hoping to discuss environmentally friendly initiatives that they are a part of. So VeChain, also an environmentally friendly cryptocurrency. And VeChain took it hard too over the last few days during that downturn in the crypto space. Right now, VeChain is trading at about 19 cents. We did see a high for VeChain of about 28 cents way back on April 17th. So VeChain chugging away, trying to get out of this slump as well. And it seems as though this environmental narrative, we keep getting slapped with it in the face. This from Michael at Val5 Links. The Colonial pipeline has begun operating normally again after paying a $5 million ransom in crypto to the bad actors who digitally hijacked the pipeline. And I feel like in some ways this came out of left field. What is the Colonial pipeline, you ask? For those of you guys who may not follow this very closely, founded in 1962, and it has its headquarters in Alpharetta, Georgia. Privately held, Colonial Pipeline is one of the largest pipeline operators in the United States and provides roughly 45% of the East Coast's fuel, including gasoline, diesel, home heating, jet fuel, and military supplies. This is why we were seeing a mad rush at the pumps the other day. So what happened? Hackers took control and they were paid off with cryptocurrency. The Colonial pipeline has begun operating normally again after paying a $5 million ransom in crypto. The attack was carried out last week by the hacker group DarkSide. The firm that owns the pipeline initially said that they would not pay the hackers. However, the pressure to keep fuel going across the eastern seaboard forced officials to make the payment, according to sources who spoke with Bloomberg. Ransom payments are generally discouraged by the country's top law enforcement agencies. The crypto payment was made hours after the attack, concluding that the hackers providing a decrypting tool to re-enable the network. The FBI has said that these hackers are linked to a group called the DarkSide, which I had mentioned, which is likely located in Russia or Eastern Europe. So hackers obviously requesting to be paid in cryptocurrency, and they got their payday because, oil, very important to keep the economy and just to keep the world moving in general. It's actually quite surprising that Tesla stock fell so much considering, but of course there were other factors at play here. Elon Musk tweeting out whatever is on his brain, the Dogecoin thing. Anyway, I feel like in certain circles he has lost a lot of credibility. Okay, and we got this as well. This from Ant1 here on Twitter. XRP hodler's lawyer John Deaton said it doesn't take an expert to see that plenty is very wrong, very corrupt, and very outrageous about the SEC's lawsuit against Ripple. This coming out, guys, after Ripple responded yesterday in court. I'm going to go over this letter in a sec. Let me talk a little bit about the SEC first, because this definitely plays a large part in this story. So more than half of all enforcement actions alleged unregistered securities offering violations related to initial coin offerings. More than half. So what they are saying is the SEC is going after cryptocurrency companies more than 50% of the time. So the SEC has brought 75 enforcement actions against crypto firms and individuals from July 1st, 2013 to December 31st, 2020, resulting in $1.77 billion in penalties. The findings, included in a Cornerstone Research report on the SEC cryptocurrency enforcement, reveal that from the 75 actions, 43 were litigated in the U.S. district courts, and the other 32 were resolved within the SEC as administrative proceedings. The SEC also issued 19 trading suspension orders since 2013. And most of these enforcement actions took place from late 2017 onward. Of course, we know that that was a very hot period for cryptocurrencies during the last bull run. So let me go down here, guys. More than half of all enforcement actions allege unregistered security offering violations related to initial coin offerings, or ICOs. The agency's ICO enforcement activity heightened in July 2017 as it released a DAO report of investigation. And of course, we all know they used the Howey test to try to prove this. Of course, the Howey Howey test outdated and doesn't necessarily relate to cryptocurrencies because it was created at a time before cryptocurrencies, so some may see that as problematic. Abe Chernin, a Cornerstone Research VP and head of the firm's consumer finance practice, commented, okay, here's what he said. ICOs have been a frequent target of the SEC enforcement actions, but this may be changing as issuers explore other potential funding sources. While the SEC will continue to focus on fraud, there is an increasing expectation that the new administration develops a clearer regulatory approach and pursue greater interagency coordination to foster innovation in the cryptocurrency markets. Next paragraph down, regarding to the need for a clearer regulatory approach, CFTC Commissioner Stump had recently expressed the CFTC's attention to the lawsuit filed by the SEC against Ripple Labs and its co-founders for having sold more than 14.6 billion XRP tokens, worth about $1.38 billion, in an unregistered offering. I am watching the outcome of this case closely because it will help to establish the scope of the SEC's authority in the digital asset space. Okay, this coming from Commissioner Stump himself, saying that he is drawing attention to the SEC Commissioner Hester Pierce's work regarding the application of the Howey test to digital assets, which provides the framework for determining whether certain assets are indeed securities. But he also is mentioning that this is going to be a landmark case. A lot of clarity is going to come out of this Ripple lawsuit. Unfortunately, and Ripple's been saying this for years now, we should have had this clarity. We shouldn't be guessing. But the SEC decided to go down this path, and now we're left with this. So, also in this context of the SEC's lack of clarity, XRP hodler's lawyer John Deaton said it doesn't take an expert to see that plenty is very wrong, very corrupt, and very outrageous about the SEC's lawsuit against Ripple. SEC versus Ripple has become the most eyed lawsuit in the digital asset space, as it is very likely to establish precedent and clarify the SEC's scope. The crypto firm has recently put to shame an SEC motion to strike Ripple's lack of due process and fair notice affirmation defense. So what came out yesterday? James K. Fillon posted Ripple's response here. Ripple filed its memorandum of law in opposition to the SEC motion to strike Ripple's lack of due process and fair notice affirmative defense. See below, and sure enough, it is listed here, guys. This is just one of the documents, page 1 of 2. But up here, you guys can see there is a Dropbox with a 35-page PDF, which I'm going to get to in a second, and some bombs were dropped. A really great defense from Ripple. BRB says, wow, is that it? Ripple really needs to get working. They started off hot, but the Agent Smith V3 disagrees. He says, I have read 27 pages. So far, it is the best, most direct, most damning refutation of the SEC to date, with linear logic and a sequential, irrefutable dismantling of the SEC's motion to strike fair notice defense and at the same time invalidate the SEC's underlying charges. So there is definitely a lot to go through in this document here. Again, guys, I will link the PDF in the description of this video. It is 35 pages. So I'm just going to go down here, read the introduction for you guys, and then I'm going to point out something with regards to Jay Clayton that to me kind of shoots the SEC in the foot. So first of all, introduction, a motion to strike challenges the sufficiency of the pleadings. To strike Ripple's fourth affirmative defense, the SEC must show that there is no question of fact which might allow the defense to succeed. 2, there is no question of law which might allow the defense to succeed. And 3, the plaintiff would be prejudiced by inclusion of the defense. And then it cites some resources down here. The SEC's motion, which does not even mention the governing standard, fails on all 3 accounts. First, the SEC asks the courts to ignore or reject Ripple's well-pleaded allegations in its answer to First Amendment complaints, which the court must assume to be true, and instead to adopt factual assertions from the First Amendment complaint that contradict the allegations in the answer, which the court may not do on the pleadings. To accept new factual allegations outside the pleadings, which again, the court may not do, and based on the SEC's version of highly disputed facts, to deny Ripple the right to pursue discovery in support of a plausibly alleged and constitutionally grounded defense. Number 2 down here, the SEC asks the court to rule as a matter of law that Ripple in fact had fair notice that it could be offering and selling securities. Just going to briefly go over these, skim them over, guys. I want to leave it to you if you want to read the full thing. But third, and finally, the SEC argues as an afterthought that it will be unfairly prejudiced if Ripple pursues its fair notice defense, identifying certain discovery requests that it finds unpalatable and that it asserts are relevant only to the fair notice defense. So just in brief, the 3 points that they really wanted to nail home. Again, a 35-page document. But this is what Wilbur54-XRP pointed out. Well, Ripple have caught the SEC with their pants down. Something to note here, something that was caught in this document. And guys, check it out. just by coincidence. Look how many likes it's got on Twitter. Okay, let me get back to this though. This was a statement from Jay Clayton on cryptocurrencies and initial coin offerings, so Ripple has included this in their defense. I found the statement here online, again from Jay Clayton back on December 11th, 2017. When I scroll down here, let me find it again, right here, it's this paragraph here that Wilbur has highlighted right over here. And the paragraph says, it has been asserted that cryptocurrencies are not securities, and that the offer and sale of cryptocurrencies are beyond the SEC's jurisdiction. Whether that assertion proves correct with respect to any digital asset that is labeled as a cryptocurrency will depend on the characteristics and use of that particular asset. So it sounds as though Jay Clayton has already spelled it out. The exact thing that the SEC has sued Ripple for has already been refuted, ironically, by the same person who brought on the lawsuit, Mr. Jay Clayton, in this statement from 2017. In any event, it is clear that just as the SEC has a sharp focus on how US dollar, euro, and Japanese yen transactions affect our securities markets, we have the same interests and responsibilities with respect to cryptocurrencies. This extends, for example, to security firms and other market participants that allow payments to be made in cryptocurrencies, set up structures to invest in or hold cryptocurrencies, or extend credit to customers to purchase or hold cryptocurrencies. Now, could he have said this as almost like a shield, almost like a protection, insurance, if you will? Because let's not forget, him and his pals eventually cleared Bitcoin and Ethereum to get a pass. And so maybe this statement was made way back in 2017, not realizing that, one day, and maybe Jay Clayton forgot, one day, I'm going to sue Ripple on behalf of the SEC. And so did he shoot himself in the foot? Has he lost all credibility? I know some of you guys already think that, Jay Clayton, but this really does not bode well for the SEC. To the Agent Smith v3's point here, this is some of the best, most direct, most damning refutation of the SEC to date with linear logic and a sequential, irrefutable dismantling of the SEC's motion to strike fair notice defense, and at the same time invalidate the SEC's underlying charges. So Jay Clayton shot himself in the foot back in 2017, not knowing that Ripple's lawyers would bring this up in 2021. All this while XRP price is recovering quite nicely. So what do you guys think? Do you think the clown factor on Jay Clayton just rallied a little bit? Bullish? Bearish? Tell me down in the comments because I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.